Okay, so welcome to our panel. This is Market Making and Trading on Chain, the future of DeFi. I thought we can just quickly start and do a little bit more quick introduction. So my name is Isabela Bagi. I'm a co-founder at GrantFin. We study liquidity providers and liquidity pools on chain and developing strategies for trading on chain. Guillaume?
All right. Hi. So I'm Guillaume Lambert. I'm the co-founder and CEO of Panoptic. We're creating an options protocol on Ethereum. We're kind of reinventing options to make them more better within the confines of the blockchain. We're launching our alpha this week. We'll go on a beta, so keep an eye open. Panoptic on Twitter. We're pretty active there.
Hi, I'm Emily. I am a protocol developer at Uniswap. So I've been doing smart contract development for a while now, and yeah, that's my background.
Hi everyone, my name is Vakhmyanin. I'm the manager and director of Datamint. So we are doing on-chain research and data analytics, and my personal background is corporate data analytics, like data warehousing and all of this stuff. And I came to crypto to just fix the issues that we have in crypto with data quality and data accessibility.
Cool. So this may be a little bit of a technical panel, so I just want to start when I say DeFi, I mean decentralized finance. And so that's basically, at its heart and soul, is just the idea that a lot of financial transactions and products can be handled by relying on blockchain technology, including smart contract technology. And so the belief is that you can facilitate all of these transactions by relying on the technology and getting rid of the intermediaries or the middle parties involved. So for a lot of us, especially those deep in the space, and I think for a lot of you guys, when we say DeFi, decentralized exchanges are kind of the next word out of our mouths, so DEXs. So this is as opposed to Coinbase, which is off-chain, Binance, FTX, those are all off-chain centralized entities. We're talking about on-chain decentralized using the technology. So one of the most popular and kind of the pioneer in the space is Uniswap. So this question is kind of a little bit geared more towards Emily, just to get us started. Uniswap was the pioneer of the automated market maker of building smart contracts to facilitate swaps and trades between different types of tokens and coins. This summer, they've just released their code for their next version, version 4, which introduces hooks and the singleton contract. Thought you could maybe kind of talk about the evolution of Uniswap and what these new changes mean and what they are.
Sure. Yeah, there's been we just came out with the 4th version of Uniswap. It's not live yet, but it's under active development in public. From version 1, you could just trade an ERC20 token against Ether, and V2, we introduced ERC20 to ERC20, and also made the pools oracles, so people had access to on-chain oracles, since getting off-chain information is pretty tough. V3, concentrated liquidity. As you said, V4 has a few new features. First, you mentioned singleton. So in all the past versions of Uniswap, every time you wanted to create a new pool where two tokens sell each other, it was a new contract, and all pools had their very own contract on Ethereum. With the new version, we audaciously put all of the pools in one single contract. So V4 will be one contract with all the pools inside and all the liquidity inside. And that's really just a gas optimization. Obviously, gas fees are a big part of trading in DeFi. You want to get those as low as possible. So big gas savings on V4. But the bigger addition is hooks, which is pools can call out to a hook, and it can be any hook. And that will perform arbitrary logic before or after certain actions you take in a pool. So what that means is people can really customize how pools work and build features on top of them. So try to just do this as quick as possible. So it makes things possible, like maybe democratizing arbitrage, auctioning off arbitrage opportunities, making sure LPs can get a share of that. We do like build dollar cost averaging, long trades over time over pools. It just makes a lot of things possible. And what it really does is it allows Uniswap, Uniswap was built by labs for the most part, but now it allows people to come in and collaborate with us and start working on all different types of pools. And I'll say, yeah, I mean, I guess that's it.
Well, Guillaume and Ivan, do you guys want to maybe like opine on what you're excited about with V4?
Yeah, exactly. So in Panoptic, we're building on top of Uniswap v3, and then we're excited to build on top of Uniswap v4. The key point is that, again, we're creating an options protocol derivatives. We can touch that, but it's easy to integrate with existing protocols in DeFi. It's not as if you have on one side some exchange and some other exchange in a different city even. It's all integratable. So the openness of V4 and now allows, it could be me in my own basement to create the best hooks possible and that'll attract all the volume. So it democratizes access to developers and also it makes the innovation much easier because of the openness of the platform itself.
Yeah, I also would add that we actually have done a lot of research on what's happening in real trades and liquidity provision on Uniswap version 2 and version 3. And we see that while this protocol has an enormous amount of trust from the community and traders, there are still something to be improved. And we believe that V4 will actually is actually doing a good job at this, because like Emily has mentioned, one of the things is arbitrage, and this space is it's not completely fair, so it's getting there with the rise of block builders on Ethereum, for example. On other blockchains, it's still something to catch up. But I think the first core use case for Uniswap v4 would be democratizing arbitrage, because you are just, as a trader, you will definitely choose a pool that gives you cash back on your swap rather than just giving this value to arbitrage bots, something like this. So I think it has a tremendous potential, but of course there is some level of ambiguity of this transition period where the liquidity will be migrating from V3 to V4, but I'm sure that would be success in the end of the day.
So, Guillaume, you mentioned a little bit in your response basically about what Panoptic does. But as they were saying, so Uniswap v1 was very much simple. You're trading, v1 to v2, you were trading tokens back and forth. They're just simple swaps. V3 introduced price ranges, and so that's concentrated liquidity. So you could choose at what price points you want, say, like Bitcoin, I want to trade between 24,000 and 26,000. So that you can kind of set yourself up for stop losses and you can kind of get out earlier. You've put out a lot of research on V3, so if you guys have time, check him out on Medium. His Medium posts are great. But you studied a lot on V3 and you kind of discovered this natural need as markets evolve. You need these kinds of options, you need derivatives layers. Can you talk a little bit about that? And did you see this as a natural evolution of the space? Is it necessary? Is it just an added bonus?
Yeah, exactly.
Yeah.
So again, let's take a few steps back and think about the history of even Uniswap. So, I mean, blockchains are exchanges of value, very secure way of transferring value from one place to another. You need to change between tokens. You need to swap. You need a New York Stock Exchange of tokens if you want. And before Uniswap came out with Uniswap v1, you had EtherDelta or DDEX, which were order book-based exchanges, very similar to what you have, again, in your trading account. But then it was inefficient, it was hard to kind of scale, and even EtherDelta got a notice from the SEC and they had to shut down, and it was shut down because it was very, very similar to what was done before. So Uniswap came in, made the whole thing permissionless, trustless. You can't even stop it in a sense because it's a set of smart contracts. And that is kind of the shift that we need to see between swapping to make it permissionless, immutable, unbreakable. Same thing with lending protocols. You have a similar system. Now there's still oracles, there's still ways that you have flaws, but moving forward, we see that the lending protocols also adopt this more permissionless open nature that you cannot really see in TradFi. You have perps, which are kind of futures, These are traded heavily in centralized exchanges. You have a few protocols still migrating towards this open permissionless fashion to make futures. So the natural evolution of where we see is that you have swapping, you have lending, you have futures. You need options to kind of satisfy everything that you can do in TradFi to the world of DeFi. Options and derivatives are huge in terms of notional value traded every day. More options are traded than stocks in the stock market every day. But it's hard to do it on chain. And again, similarly to Ether Delta and the precursors of Uniswap, had a very skeuomorphic and TradFi-like approach that could get shut down. The existing protocols are still trying to kind of match what happens in TradFi, but then that means that's why we haven't seen that much traction in terms of options. So again, starting from scratch, we decided to create a new, better way of doing derivatives. Options could be perps as well, but in a way that is, again, espousing the values that Uniswap kind of is pushing forward. And that's why, again, in Panoptic, the front-facing or the front end looks very much like an options protocol. You can buy options, puts and calls. You can buy GameStop-like. You can buy calls, same way you did it with GameStop. You can buy puts. You can also sell options. But in the background, it's all permissionless. We're actually integrated into Uniswap v3, where the liquidity is kind of communicating with the liquidity in Uniswap. It's a very integrated way, again, that you cannot do in TradFi. So the one kind of missing piece in the world of finance, which was options, we think we've solved it. But the key point is that you move forward by making it more, maybe different, more decentralized than what you see in TradFi. And hopefully this is going to get traction. But even if I'm the only one trading options, because it's a permissionless system, I'll make money. I'll be able to kind of sell them, buy them myself. You don't need the volume. You don't need the market makers you see in TradFi to gain adoption. It's all kind of permissionless, built within kind of Uniswap, the biggest ecosystem for liquidity.
Awesome. Ivan, Emily, you guys want to jump in and add anything to that, or?
Well, I think the decentralized exchanges bring a lot of disruptive advantages to the financial markets, because I just don't want to talk a lot about obvious things like 24-hour operation. It's permissionless. It's you actually have the control over your funds. So all of these things, but it also brings a lot of opportunities in terms of transparency. Because imagine traditional exchange. So the only thing you see is like order book. So you don't know who sells, who buys, what's happening behind the scene. Even for regulated exchanges. For OTC market, it's even more you don't understand what's happening. In decentralized exchange, you can actually see all the trade activity. You can see all the liquidity events, and you can actually analyze the whole history of what has happened. You can even gain access to the trade orders before they actually got it executed by looking into the mempool. So that's really a lot of opportunities. The only problem here is that these opportunities are still a little bit offset by the complexity of the space. So if you imagine traditional trader or hedge fund, you immediately think about those big screens, Bloomberg and Refinitiv subscriptions and things like this. And this is something that you don't have in crypto right now. So you have these great advantages and opportunities in terms of transparency, but you don't have the right analytic tools to actually get the most out of it. And that's actually the thing that I think has great potential right now.
So I'm glad you brought that up, Ivan, because that brings us pretty well halfway through our next question, honestly. But one of the most exciting things about blockchain, right, is that it's all a decentralized public ledger. So that means anybody can go and look at all the transactions that's happened on Uniswap. We can see all the trades. Now, obviously, easier said than done, right? And Ivan's group is a data and analytics blockchain group that makes sense of all of these hashes. And without groups like him, a lot of people are just looking at hashes and are kind of looking at Etherscan logs and trying to figure this out. So like I said, one of the exciting things is being able to rebuild that order book. And as we've evolved from version 1 now to V4, and with groups like Panoptic that are bringing out the options exchanges, what are you seeing from a data side of things that you still think there needs to be a lot of work done on the analytics side? What are you excited about as the AMs evolve in the space?
Yeah, as I said, the complexity of the space lies in the fact that you have all the data available, so it's readily available. You open Etherscan, you see all these bits and bytes, but the question is, how do you actually give them actionable interpretation? So, and to do this, you actually have to understand the logic of protocols. And for example, what we do, we do the abstraction layer over the different decentralized exchanges to represent the data in a familiar way for the traders or investors, so they actually can see something similar to what we see on like Bloomberg terminal. But even more than that, so as decentralized exchanges, they also provide a permissionless way to actually be a market maker in a sense. So you can take your money and invest in the liquidity pool so that automated market maker would make market making on your behalf. And the complexity here is happening because it's still really hard to calculate your proper P&L, do proper backtesting, and do proper estimates of your future rewards. Because I just put it simply, so most of all tools you have like on the web, then you like open some liquidity staking user interface, and you see this projected APR, like 70%, 90%. This is obviously will not be true in reality, because what they show is just like a fee accrue, projected fee given the current like trade volume, current liquidity, etc. But we see a lot of improvements in this space from different angles. So we see like automated liquidity managers on one side. And on another side, that's where we are active, we see professional groups that help those who want to invest this liquidity or build a profitable strategy to actually do this analytics. But I would actually hope that in the future, more and more of these tools will be generally accessible by the public.
Okay, so let's take a step back a little bit. I'm going to ask the group to kind of opine on where they see kind of big idea, broader future of AAMs, what DeFi is going to look like in a few years. So by that I mean, do we need more integration with oracles that bring in off-chain data? So what's going on in centralized markets, or that could mean anything, sports scores, or anything like that. Or is it maybe integration with different protocols, like a deeper integration there, so that a lending protocol can better integrate with a swapping protocol, and you can kind of do them all at the same time and take an option out at the same time. Kind of what are your big picture things that you want to see, or you think maybe you're heading towards? Yeah.
Yeah, I think maybe a big narrative right now that's going around is Intense, and Uniswap just released an Intense-based protocol, which basically means, when you sign a message to trade on Uniswap, you're telling the Ethereum blockchain exactly what you want to do and how you want to do it. But with our new Uniswap X protocol, you kind of just sign a message, this is what I want, however you get it to me, that's up to you. And similar to like CowSwap and Bring Trade and 1inch Fusion. So I definitely see a future where this becomes more and more popular. I think that AMMs will still hold their place, especially for things like long tail tokens and being able to bootstrap new projects. Like for all these, the infrastructure for all this new stuff is going to get more and more complicated, and there's going to need to be a lot of more moving parts and a lot more just infrastructure. But the cool thing about AMMs is, you deploy it on chain and it's there, and it's kind of like rudimentary in a way, and it will always be there. And it's really interesting for things like Panoptic, where I think AMMs kind of, especially with concentrated liquidity where we came out within V3, even though it's liquidity providers and swappers swapping across that, I think like despite kind of the basic setup of how these pools work, there's a lot more to it like than meets the eye. And I think Panoptic's a really good example of that, how you can use something simple as a building block for like a decentralized, permissionless options protocol. So yeah, those are some of the things that I think about, especially at Uniswap with these two, like where we're headed and what we have already. So yeah, say that.
Yeah, and on my side, I think I'm a bit, again, of taking the other direction. I'm an Oracle-free maxi. Oracles mean that you need to transmit information from outside of the blockchain to the blockchain, and that guides, okay, what can you do, what cannot you do. I feel like the same way the New York Stock Exchange doesn't need an Oracle to say what the price of Tesla stocks, because it's traded there. A lot of what you see in the blockchain world, DeFi, is self-referential, and we should embrace it a bit more. I feel like the future will be more of a ecosystem that works, more integration, more exchange, more kind of building on top of other protocols, but all of it will be self-referential in a way that you don't have external risks, you don't have any externalities that can prevent you from operating. And that is difficult to do. This is the baby steps that we went through for even lending protocols. They have to rely on price feeds. I feel like, again, the future will be, can we figure out a way to make it so that it's an ecosystem, it works in a way that doesn't need any externalities, and it's a kind of self-contained environment. Again, you can do swapping currently in a way that is very, very decentralized. All of the other major financial activities aren't there yet. If we want to go broader, even more of that, you need to kind of convert so that the blockchain is where the exciting stuff is happening and not necessarily somewhere else, and we need to kind of transmit or beam that information to the blockchain.
I'm going to move just, we can squeeze one more question in here that I think is somewhat topical, that I think a lot of people will be interested in. But I saw a recent report from McKinsey that was, take that as you will, but they were claiming that one of the big issues is scale. A lot of financial institutions want to see scale. Can it handle scale? And so stable coins, right, they are about circulating surprise, probably around 120 billion. And it probably moved roughly, they estimate like 500 billion a month in trading volumes. So they're saying that like a lot of institutions are seeing it, yes, scale is possible, and this is kind of the first foray. And we saw PayPal launch their stablecoin. So stablecoins on chain, probably some of the highest volume pools and the highest volume trades and trading pools, and are half of them stablecoin or stablecoin. And as more either companies adopt stablecoins or countries start bringing their own stablecoins, there's a Euro stablecoin. How is that going to play into the DeFi ecosystem? Is it going to end up becoming, possibly a forex, a decentralized forex market where if I go to Europe, I can just swap $50 so that I don't have to go to I know the word in Croatian, but an exchange desk in Europe. So yeah, just want to hear your thoughts on the stablecoin market and how that plays into DeFi especially. You want to go first?
Okay, so regarding the stablecoin market, I think there are two perspectives here. So one perspective is like what we have talked a lot like today and yesterday, is that stablecoins are a way to like enter or to do some like on-ramp, off-ramp transactions, and this is very important for crypto industry, of course. But another thing which is frequently overthought is that when you do some like profit and loss calculations, and when you even think about your profits, you need to have some baseline. And this baseline is currently, like for most of the traders, is USD. And that's actually why, for some extent, stablecoins pegged to USD are so popular, because you need to have a way to like fix your profits, and you have no way to do this if you have only crypto-native assets. Like for example, you have Ethereum, you have BNB, you have like I don't know AVAX, but if you don't have a USD like benchmark, then how would you calculate if you are in profit or you are in loss? And if speaking about this from some like holistic perspective, to truly develop the crypto as a like decentralized and fully independent financial ecosystem, we need to have stable coins that are not pegged to some like local currency. We need to have some stable coins that are pegged to the whole like GDP or to economic growth, something that would be like inflation invariant, so something like this. Of course, we are like still very far from it, and before that, stable coins are the keys, and we will see some like DeFi forex, of course, I think in like maybe 10 to 20 years, a lot of like this like economy-pegged stable coins will gain traction.
Yeah.
Do you guys want to jump in on it?
Yeah, I think like going back to the keynote too, like before this talk, like crypto is like not that easy for people to use. So when you brought up the example of like going to the airport and like exchanging your euros, I think onboarding is just like the huge bottleneck for like their ever just being like this really easy way to go from stablecoin to stablecoin. So that's definitely an area of improvement. And I agree that like, you know, when the kind of the banks were failing and we thought maybe USDC wouldn't be backed anymore, that almost brought down like all of the Ethereum stablecoins because they in turn depend on USDC, so that obviously is a huge area for improvement as well.
Yeah, maybe on a brighter note, I think stablecoins and currencies have a natural fit to the blockchain, and we can go beyond that. It could be futures trading. I mean, you can trade corn futures. It used to be traders shouting in a pit. Now it's electronic. If you talk to the CME, the Chicago Mercantile Exchange, the next level for them is the cloud. So they are maybe 10 years behind us saying, we're going to AWS. It's not going to be a data center in New Jersey. It's going to be the cloud. So the blockchain is what I see as a natural fit for a lot of the exchanges. You can have, again, decentralized exchange of currencies, futures contracts, stocks eventually. Again, you may not see your Amazon stocks being traded on chain, but then all the new companies will have tokens, tokenized equity. And again, we're setting up the rails for this brand new kind of financial infrastructure. And at the end of the day, this is going to be like the 24/7 open and permissionless system that we can access, all of us can access, as opposed to now going through registration entities. I cannot even trade options myself. I had to go through classes to actually get to a point where I could actually be trusted with my own money. So I feel like the openness, trusting the users, making sure that no barriers are there, because there's no need for barriers. It's all very secure, backed by smart contracts, means that you can actually get to the point where hopefully, in the near future, most of the financial activity will happen on-chain. And we'll look at everything else that happened, again, the data center in New Jersey as a very stupid and archaic thing that we moved forward and then moved on from.
Awesome. I do want to let room for one or two questions. Ian, anyone? Oh, we got one way over there.
Yes, so I just had a question in terms of how the market is evolving to trade like commodities like soy and corn. I don't know if you're familiar with the project AgroCoin. Agro Token, I think it's called. If you can elaborate, they basically connect farmers and then able to take loans on their actual harvest, and then that way it gives them international liquidity instead of just local liquidity.
Yeah, sure. And I feel like these futures markets, these options markets came out because users, farmers wanted it to happen. It's not the entity that says, we're going to offer it to you. It's from something from within. And again, I'd be happy to sell my corn futures when I see a thunderstorm coming in the middle of the night. I don't have to wait for the opening of the market. But yeah, I feel like maybe this is similar to what we saw with MintStars. It has to come in from within. You need something, maybe we should create a bank, credit union to onboard and offboard users more efficiently. Farmers will have to come together and also kind of trust the system. But again, the legacy system had a similar history in the past. We can maybe repeat it or learn from it and do it in a more expedited way for sure.